So Félix Villatoro from the Universidad Adolfo and also part of Netspar, is going to present on retirement funds, early access during a pandemic, impact on financial markets, which is empirical work from Chile. Okay.
Good morning or good evening, depending on where you are. Thank you, Mike. Thank you also for the organizers, the opportunity of participating in this very interesting special session. So in this work, this is a joint work with a colleague from the Universidad Adolfo Ibáñez, Viviana Fernandez, and we explore what were the initial implications of all the process related to funds early access during the pandemic. So I'm going to get going. So I will give a very brief introduction, mainly to give some perspective about the importance of the pension funds in the Chilean pension system. Also, I will talk a little bit of perspective about the size of the pension funds and their involvement or relations in the Chilean financial markets. I have some estimates on the initial impacts of this retirement process, some information about the liquidation process itself, and I will end up with some quick remarks. So, well, just very quickly, the pandemic has proved especially challenging, right? Not only for Chile, but all around the world. It's truly a global shock. So in the case of Latin America, we have about 7 countries that are discussing the possibility of using pension savings in order to mitigate the lower employment, lower wages. How much of access is being given? Well, it ranges from 10% up to 100% of pension savings, depending on the country. And currently, Chile and Peru have already passed such legislation. So there are many ways in which this process can be approached. But in this paper, we focus on the impacts on financial markets. So just to give you a little bit of perspective, Chile has had a defined contribution scheme since 1981. It is the main pillar of the Chilean system. It also has voluntary savings and solidarity pensions, but the mandatory contribution is the largest pillar. And the contributions are 10% of monthly wages. There is a cap at about $3,200. That's how much the maximum of contribution. The system has wide coverage in terms of the population that is a member of the system. However, it has serious issues, problems, low frequency of contributions, low level of contributions compared to the average OECD contribution rate is 18%, I believe. Also, retirement age is basically the same since 1981, even though life expectancy has considerably increased in Chile during the last decade. So the system has mainly issues about having its key parameters basically unchanged since 1981. Nevertheless, the system has grown considerably. By the end of 2019, just to give you an idea, assets under management reached $237 billion. Compared to Chile's economy, it's 80% of GDP. So it's a sizable amount, which makes it also interesting to study the implications of this early access on local financial markets. Also, unlike regulation in Australia and UK, maybe, in the case of Chile, since the start of the system, there is a very detailed and explicit investment regime filled with investment limits. Currently, I counted them a few days ago, almost 70 investment limits in place regarding the type of financial instrument, equity versus fixed income, how much can be invested abroad, or how much in local investment, and so on. So large set of investment limits. Currently, there are 5 types of fund. They're labeled A to E. and people can choose with some age-related restrictions in which fund they want to invest. And the main difference between these funds is their equity exposure. So the maximum equity exposure ranges from 80% for Fund A down to only 5% for Fund E. I will give you a glimpse of what's actually inside the pension funds portfolio, but they are very, very close to this limit. Important, and just to give you it will give you a sense of perspective about what Ben just was saying. So in the case of Chile, up until 2020, withdrawals were only allowed at retirement. No other reason could be given in order to have access to the fund. In the past years, there have been some judicial attempts, so people going to court in order suing the pension fund managers in order to have access to pay debts or because they were terminally ill, for instance. But these attempts have all been unsuccessful. So really what has been going on in Chile is completely new. Okay, so just to give you a sense of main results, in case I run out of time. We have found evidence of price effects on local equity associated to this early access law. We study the usual measures of abnormal returns, cumulative average abnormal results. The results are very noisy. A lot of heterogeneity in terms of the sign of the effects of the announcements that accompany this process. But interestingly, we do find some evidence that these cumulative average abnormal returns are being driven by or have something to do with pension fund investment decisions, mainly selling decisions. So that has put a negative pressure on the cumulative returns. We also find significant effects of the impact of this process on the nominal exchange rate between the Chilean peso and the US dollar. Overall, these effects have leaned towards appreciating the Chilean peso, which was to be expected since this liquidation process would involve selling investment abroad in order to bring back to Chile. The liquidation process itself has been eased tremendously by the central bank. It has played a central role. I will give you some details in a few minutes. And what we point here, besides the obvious challenge of what can we expect for the level of pensions in the future, but I will not talk about that today. I'm going to talk mainly about the relation with financial markets. So there are challenges in terms of hypothetical future withdrawals. The first early access law was supposed to be a one thing extraordinary measure, but a second withdrawal has already been approved and is already taking process, and people are talking about a third withdrawal. So that would be very challenging for the central bank, whether it can keep functioning or performing or easing the process just has been doing during the first withdrawal. And also how will the rolling out of these temporary measures that the central bank, how would it take place? So this is what the portfolio of the funds looks like. Here we are looking at all the funds grouped together from all the pension fund managers. So it's the whole pot of pension investments. Almost a quarter is invested outside Chile in equity. We have very significant investments also in Chilean bond governments. Here we also have a significant investments in bonds issued by Chilean banks. These are international bonds. You have then bonds issued by Chilean firms, local equity, time deposits, and alternatives. So that was the state of the portfolio at May, which is just the last month before this law started to being discussed in Congress. So as I was telling you earlier, there were 5 types of funds. So this is Fund A. So we have almost 60% of foreign equity in Fund A, heavily invested outside Chile. And at the other end of the range, this is Fund E, and it's mainly a fixed income fund and local bonds, government bonds, bank bonds, bonds issued by Chilean firms, time deposits, and very little foreign investment. So those are the 2 extremes. Okay, so here there's a brief description of the key events related to the discussion of the early access law. The discussion started on June 24th. I tried to distinguish so you see some red dates, some blue dates. So the red dates are dates when the announcements or the events that took place in principle should be constitute as warning in terms of the expectation about the funds having to liquidate assets and possible negative pressures in financial markets. And in contrast, I have some blue dates here because what happened on those dates is that we have, for instance, on July 23rd, the central bank announced its willingness to implement special measures in order to help with the liquidation process. So these types of announcements, one would expect would go the other way, right? In terms of maybe reducing volatility or easing the functioning of financial markets. July 27th is also an important announcement because the pension regulator announced its willingness to give some flexibility in terms of the pension funds complying with investment limits. So that is also a key date. Okay, so about the law itself, the individuals were able to return up to 10% of their pension savings. There is an upper and a lower cap. You cannot take more than $6,000, and also you cannot take less than $1,400. If people that take this amount, or maybe less, if there is no more money in their account, they will have zero balance afterwards. So no previous experience of this type of process since the creation of the individual accounts in 1981. So it's truly a new event. There is some empirical evidence for the case of Chile about the price effects in equity markets. There are a couple of recent papers indicating that when there are events in which pension funds have relatively large sell-offs of local equity, there is impact on prices. And also, there was a lot of uncertainty in the initial dates regarding how the investment limits would be enforced. For instance, this paper in 2016, it deals or studies an event in the past in 2007 where pension fund managers had to liquidate an excess investment of local equity. They were mandated by the pension supervisor, and this had counterproductive effects on the stock prices. So that's what that paper shows. Also, uncertainty about the involvement of the central bank, whether there would be a presidential veto that would not allow this law to be approved. So a lot of uncertainty in these events. This is an estimate of the potential asset liquidation given the portfolio positions in May. And if actually 10% of the portfolio was liquidated for the system as a whole, this will mean that up to $2,000 million in equity, local equity, will have to be sold. This is the estimate for the amount of local bonds that will have to be sold, and the amount of dollars that will have to be sold also in order to liquidate foreign investments. And the orange bars that you see here is the median daily transaction in those markets. So local equity markets, local bond markets, and in spot transactions in foreign exchange markets. So as you can see, the blue bars are much larger than the orange ones. So a large size of portfolio liquidation compared to the usual transactions that take place in the in local markets. So of course, the law didn't mandate that all the liquidation had to be done on the same day, in just one day, fortunately, but it did give a kind of a tight window, right, in which the process had to take place. So this is the evolution of a couple of index that follow equity markets. The blue line is a Chilean index, and the red line is an emerging markets index. And here I have marked some of the key events where the process started. So this first group of dates is related to the first and supposedly on one in a only retirement, but this is the process related to the second withdrawal that has just been approved a couple of days ago. And so one has, as I was telling you earlier, regarding the cumulative abnormal returns. So a lot of heterogeneity for local equity. This is true for all event dates. So there is a wide dispersion. We find both positive and negative abnormal returns. It's not easy to pinpoint exactly what is driving this heterogeneity. The traditional cross-section CAAR analysis lacks power. In our case, we have a total of 77 stocks, local stocks, that are included here. They are either in the Chilean equity indexes, or they're inside the pension funds portfolio themselves. So almost 80 stocks. So rather than trying to find whether the CAAR is statistically significant or not for this group of stocks as a whole, what we attempt to do is to try to tease out what is driving the signs of these cumulative abnormal returns. So we run some regressions we include some stock characteristics, liquidity, for instance, the bid spread, the free float, whether the stock belongs to a retail sector or not. As Ben was showing earlier, that is a very helpful data, right, about whether what people were actually planning to use the money for. We don't have that kind of data here in our study, but there was a lot of speculation when this process was being discussed about whether people were going to increase their purchases of durable goods, for instance, which did happen. So we try to control also for that. And we also include some characteristics which seem to be the main drivers about the pension funds portfolio. For instance, the actual stock investment, we have the data we have, it ends in July, at the end of July. The bulk of the process took place in August. So in a couple of weeks, we will have very interesting new data in order to update our estimations. And also price pressure measures, which we borrow from the asset sales literature. And this price pressure variables are the ones that seem to be driving the cumulative returns in our studies. So just to give you a quick glimpse at the type of regression we run, so the dependent variable is each stock's cumulative abnormal returns. I have a couple of events here. Event 3 is related to one of the steps in which this law accomplish an additional or fulfill an additional process of being approved. Event 6, well, this is an event related to central bank willingness to step in and help in the process. And so you can see here the negative coefficient of this price pressure variable, which measures the degree in which the pension funds have been selling this stock. So remember, this is up to July. So but we still have to wait for the August data, but we already here we are seeing some expected sign, right, in the expected direction. Retail, the control for whether the stock belongs to a firm in the retail sector also shows significant positive. A lot of things going on with this process because well, it's taking place amidst the pandemic, right? So not only is the price pressure going around, but also expectations about what this money will be used for. So it's not easy to disentangle this. Okay, I'm going to skip this because I know I'm running out of time. So, but that's why I gave you a quick glimpse of the main results. So let me just show you this is only to give you a sense of how much members have actually withdrawn their funds. Around 83% of members have actually asked for the early access, and the payments that have been made are about 9% of assets under management. So wide use of this opportunity to have early access to the pension savings. The liquidation strategy, this is data from the pension supervisor. Mainly, you can see here that foreign investment is the asset that has been being sold. This is bank bonds, and this is central bank notes. So those are the main instruments that have been taking place on the selling. Who has been buying this? I'm going to sorry, I would like to show you the, yes, so the central bank, as I was telling you, it has played it has played a key role. So when we try to find data or measure the impact on transactions on the Santiago Stock Exchange, you see business as usual, basically. So what has been going on is that the central bank has been actively buying bank bonds, subscribing repos with the pension funds, buying back its own bonds in order to provide liquidity. As a result of this process, the central bank now owns 14% of all bonds issued in Chile. And between December 2019 and August 2020, the central bank balance, I'm sorry, it should say balance here, increased by 83%. So huge increase in a very short amount of time. So the big question maybe going forward is how the central bank will roll out the measures that have been taking place and whether it can keep them up if they're during the second withdrawal process and eventually third withdrawal process. So with that, I'm just going to go to tell you about the other work that we are currently doing. Well, we do have to run some robustness checks for the identified effects on the equity markets and foreign exchange markets. We also are working on estimating impacts or possible impacts on the yield curve. We are waiting for the August data in order to have a better sense of what has happened in the pension fund portfolio. We would also like to run a formal analysis, we haven't gotten to this point, about the effects on volatility. So the current focus has been on levels, right, of these financial market variables. And also there is very interesting heterogeneity by pension fund managers. So even though 80% or so of members have asked for early access, there is wide dispersion. So for some small pension fund managers, the percentage is even larger, 90 or more %. But for other fund managers, less members have asked for their money. So we hope that we can come up with an additional identification strategy in order to exploit these differences. Okay, thank you very much.